I didn't allow the organizers to play an in-between ads or something. Sergio, I hope we're okay to continue, yeah? I'm just a bit cautious with the fact that our original timing blown away.
But one question each, right?
But no, I don't have dedicated questions for like each of you. I'm actually gonna pose questions and feel free to jump in on whatever you consider more interesting. So just for the audience here to know who do we have in the panel, some of you spoke today already, but others not. I'm just looking at the list and trying to match you with the positioning. So from my right, we have Alfred Taudes, founder of Vienna University Research Institute for Cryptocurrencies, and scientific head of Austrian Blockchain Center. I'm pronouncing these taglines with particular satisfaction because the idea that Austrians have in university professors which are focusing on crypto economics and blockchain is really remarkable, and I think it should be an inspiration for a country like ours too. Then on my right is James Wallis, which you've already heard speaking about CBDCs from RIPPLEX. I'm planning to challenge James a bit on the CBDCs part.
I'm ready.
At my left, I have FELIX CRISAN, co-founder and CTO with NETOPIA Payments. So has been around, for a lot of time in the payments sector, including crypto-related payments. Yeah. And last but not least, we've already heard earlier today NICOLAS, yeah, Chief Innovation Officer with WORLDLINE, again from the payments industry, right? So I have two persons from the payment industry on my left, an academic entrepreneurial professor, as Alfred tags himself, and then James from one of the largest cryptocurrency issuers, let's say, by market cap up to date. And we're supposed to discuss about DeFi, and simply because I'd like to take away a bit of the mystery around that. And I think, you tried to do something earlier today. There's a mythical aura about these words, and many people use them, but they're not very clear always to a lot of them. So we know DeFi, we Google it, it stands for decentralized finance. But I would, ask anybody from this group, and we can, complement each other, to just say, what is DeFi? What is a good definition of DeFi? Anybody wants to start?
I can try to jump in. I mean, I don't know if it's a good definition, but at least I can shed a bit of light on this. And so DeFi stands for decentralized finance as opposed to centralized finance. And when we look at that, we clearly see one environment that goes into a central point and rebounds, and another environment that may not go directly to a central point and rebound. So that's one definition of it, but the other definition is about centralization, and centralization also sometimes underlines the fact that one place regulates everything, gives the orders, and wherever you are, you have to abide by these rules. And decentralization in that case means there's one place that gives the rules, but the rules may be modified or adapted based on the environment I'm in, just to make it more relevant for where I am. This is the second definition of decentralization. And to me, the crypto world is everything but decentralized in the second sense, because a node, wherever it is, does the exact same thing that any other node. So to me, the process is highly centralized because whatever the node is, it will apply the same rules. It will abide by the same rules. So that's why I've rather used the word distributed or parallel, which in my opinion depicts very well the fact that you don't have one single server somewhere and everything goes to there, but there's plenty of servers, but all the servers are exactly the same. So that's why DLT doesn't stand for decentralized, it stands for distributed, and that's why I like this, rather use the word distributed than decentralized.
I feel like Felix wants to jump in.
Yes, I somehow disagree with this, and the disagreement comes from the fact that nobody forces these nodes to run a specific version, and in this respect, maybe some of them are running the same Bitcoin Core version 22 or something, but it's not because it's forced by somebody, and that's exactly the difference between a blockchain and the DLT, is the fact that there is a heterogeneity or a homogeneity in what kind of software it runs and who provides the software. Usually in DLT, it's a single piece of software that is provided by a single entity, but in a truly decentralized ecosystem, it's heterogeneity, and there are possibly multiple providers and multiple implementation of this. And this is actually true in some of the big projects.
But you agree that all of these nodes have to abide by the same rules. They have to do the same thing. They don't do it the same way because it's not the same code. It may not be the same language, but at the end of the day, there's a standard. They do the exact same thing.
Yes, but once again, the rules are decided at least in some of the projects that matter, are decided by the community.
Centrally.
I totally agree. It's not centrally. It's a community.
The rule?
It's a community.
Okay, it's a community. Community is not centralized then. Okay.
I'm really glad we started with a bang, with a dispute. That's great, but I'm gonna play my moderator role here. Simply because I have a slight feeling we're getting a bit too technical. I'm more than happy to come back to this. I would look for more angles about decentralized finance, like brief layman words describing what DeFi is.
Okay, I can try that. To me, it's about creative individuals and startups using the technology to fix inherent problems with the existing financial system.
Okay, I'm not going to ask you which are those, because that's a question that will follow.
Yeah, you said high level, right? So I'm keeping it high level.
Good, thank you. Alfred?
As an academic, I will try the simple one. Normally, if you think about banks, it's about lending money, it's about investment, what they do, and it's about exchanging currencies. And normally, if you want to do that, you have to go to the regulator and you have to establish a company and so on and so on. And typically, as a customer, you have to identify, and you basically have one service provider of you. On a public blockchain, all these things are replaced by smart contracts. You already heard about these programs that are run by all nodes. And basically, everybody can deploy a smart contract. Of course, the problem is you have to get the people to use them. And you don't have to do AML. You can simply make your own wallet and make your own addresses. And that's, to me, the essence of DeFi.
Which from the like of how you described it, is also something that stimulates or should stimulate innovation, right? It's not something set in stone.
I want to just make a simple, one-sentence definition what I think that DeFi is. It's any environment which allows exchange of value in a peer-to-peer fashion.
Okay, so you brought into the light also the disintermediation part of DeFi, right?
I think that's the most important.
Which probably we can say to a certain extent at least, it relies on the smart contracts, right? On the protocols that we can all verify and trust and rely upon. And maybe, just speaking on what was said and the brief dispute about decentralization, it could be that sometimes in our brains we use the same word for two different meanings. Because I think we're somehow conditioned to think about centralized systems as being the only source of order. Why? Because in our mind, order requires power, requires authority. And unless you have a central authority, a single point of exercising power, you're not going to have order, and without order there's chaos, and we have a problem in dealing with chaos. So maybe a question to all of you in a decentralized environment, how can we still have order?
Well, it's very interesting because in lots of cases, people tend to compare the DeFi world or the crypto world as the Far West. In the Far West, there was lack of regulation. Everybody did whatever they want. They can shoot people, they can do whatever, they can steal, they can do whatever they want. So if people tend to compare them to, it's probably because the openness and the ease of creation of services without no regulation or no control by anybody for anybody tends to attract people with ill intentions, and probably that's the reason why there's less law and less order in the crypto world, because there's less regulation. And I think that, like I said earlier on, the regulation always come afterwards, because they're like the cavalry. They arrive after the fort has been attacked, and it's trying to solve for next time not the fort to be attacked. But regulation comes afterwards.
I'm not challenging in principle the idea of regulations. I mean, it would be also a bit weird if myself as a lawyer, I would say we don't need regulations. But on the other hand, I also don't want to take it like, you know, it's carved in stone and has to be there. Amongst others, because what this market's shown for a long period of time, yeah, we're talking a decade, yeah, a decade of evolution, is that in spite of not having, and to some extent is a myth that there is zero regulation, it's not exactly like that, yeah, because the exchanges are regulated. It's maybe a debate, should they be regulated as securities exchanges or commodities exchanges, but you know, they're subject to AML rules and so on, and it depends a lot on the jurisdictions. But let's say they don't have special dedicated regulation, right? And yes, it's true that that attracts, like what you said, evil men. On the other hand, you know, since the fall from Eden, you know, it's in human nature to do evil things, as it is in human nature to do good things.
That's why there are laws. That's why God wrote laws. Exactly.
And that's happening across all our ecosystems, for true. Yeah, I mean, I think most of the money laundered in the world, you know, what do they use as vehicles? Or what have they used for the last tens of years? Well, the only system that is used for transferring money, which is the current financial system. Okay, so I'm not against regulation. I'm just saying it's very interesting that these systems manage to survive and to attract more and more institutional investors, and maybe a way of maintaining order in that space. But I'm really asking you guys to comment on that. Is exactly the transparency and reliability on the protocols and the ability for each participant to check them and to see exactly what's happening.
Yeah. Yeah. If I may just add one thing, because often, and I tried in my speech to really make the difference, explain the difference between public and private blockchains. And I think that what is important is, because you talked about public blockchains, and what you said is also possible on private blockchains. It doesn't have to be in public blockchains. But public blockchains have an inherent problem: speed, energy consumption, and risk of being hacked. When you look, for instance, lots of people, when I say that, I say, what about the internet? Some people say, look, the internet is totally public. Hell no. The internet is totally private. You pay to get access to internet. So what if we had a financial environment that was private, so we would pay access to it, where people could create easily smart contracts, services, and so on, but it wouldn't consume that much energy, it wouldn't be prone to be hacking, it would be more scalable, more efficient, it would have lots of interest. So the Bitcoin has been started by cypherpunks, people who wanted to be out of the system. They have the right to. I don't say they're wrong. They did that. But this is one extreme. Why do we have to stay in the extreme when maybe somewhere in the middle there is something that may have the advantages of both sides? And that's an open question.
I think that if we talk about order, and if we talk about how can we ensure that in this kind of distributed or decentralized systems we respect or we reach a consensus, we have to go all the way back to defining, I don't know what an atom is. Or I think that point by point or step by step, we will end up reaching that common ground. So as long as we are able to start from a common ground and then define some rules and then say that everybody which abides by these rules can participate in this ecosystem, I think that will give you, in the end, order.
think Alfred wanted to add something.
Yeah, just for the discussion. Of course, public blockchains have some other advantages. We now have the Lightning Network, so speed is no problem. If you look at electricity, if you compare it to other systems, of course, it's not a nation. And if you have a permission system, those who hold the power, they can censor. And this is one point why you would argue for a public system.
It's not the place, but Lightning Network is totally debatable, and it doesn't prevent at all the power consumption. But we can discuss that after that. But it's really not a good argument. Sorry.
Okay.
Is this technical enough for you?
I love
Yeah.
it. I
You like it?
People,
Okay.
people have controversy here. But I'm coming back to my boring list of questions, and you guys went a lot of fundamental matters related to DeFi, blockchain, and so on. Actually 2 questions in one. How is DeFi different versus traditional finance? And correlative to that, what needs does DeFi address? Why do we need DeFi?
I'll have a start at that. So I think it goes back to my opening comment, which is, this existing financial systems have some weaknesses. So, we talked about financial inclusion, we talked about, peer-to-peer lending. So DeFi, its fundamental is, financial services or financial solutions running on a blockchain of some sort. No debate on which is the best, right? Apart from XRP Ledger, obviously.
Some blockchain.
Yeah. Now I've lost my thought. No, but fundamentally, I completely did lose my thought, actually. Let me come back to that one.
No, but I would
I was so good at my own joke, it made me lose my memory.
No, so we're going towards, how is DeFi different versus traditional finance? And what needs does DeFi address? Yeah?
Well, a simple use case, suppose you have a cryptocurrency like Ether, and you don't only want to use it for speculation, you also want to earn some interest. And then you need a smart contract that gives you interest. Or we already heard, I think you said we have 2,000 cryptocurrencies. I think we have many more. Many of them are crap.
18,000.
Yeah, many of them are crap. But suppose you have them and you want to exchange them, and you don't want to go to your normal bank.
Yes.
Then you need new protocols, and because all these transactions, they have a cost. So you need new types of protocols. You cannot use a normal order book thing. And then you need new smart contracts for doing that. And basically for these use cases, for people who already have cryptocurrencies and want to earn some money beside and want to use them, this I think is the core use case of decentralized finance.
Right. So that there should be one need that is addressed via DeFi. Any other needs?
I want to put my anarchist hat on, and some will say that this anarchist hat...
waiting for that moment.
Yes, the anarchist hat is a tinfoil hat, maybe. And I would say that as long as we accept that money can exist outside government, then we need this money to have the same kind of rails and the same kind of functions that the traditional money has. And thus, we have the need for DeFi to accomplish everything that the traditional finance does in an environment where money is not controlled by the government.
The 2 answers that you 2 gave are challenging me to another question that I had in mind, but I cannot...
but just before, I mean, there's one thing that really bothers me is that when we use the term money, because money has a very clear definition that's been said earlier on, and the examples are really not money. It's not money. It's an asset. It's whatever you want, but it's not money because it's not a store of value. It's purely speculative, and I mean, it's a definition. So it's a currency. It's an asset, but it's not money.
Well, some would be on a contrary view, and if we look on a long enough time scale, even the narrative with the store of value doesn't really hold.
No, well, you mean for fiat currencies?
For some of the currencies, for maybe most of the currencies.
I mean, Terra Luna improved drastically.
No,
right?
clear. But then again, I would beg to differ.
And the Zimbabwean dollar did the same, so that's not really.
There is no, I mean, it might sound surprising, at least in some jurisdiction, there is no such clear definition of money. We clearly know from a legal perspective what legal tender is, but what money is, that's a whole discussion about that.
No, there's a definition.
Yeah. So, that being said, I've noticed that the two panelists who try to give an answer to use cases for, you know, what needs does DeFi address and how is this different versus traditional finance, what you did, you told me we need DeFi because we have cryptocurrencies and we have to deal with cryptocurrencies, we have to trade, transfer, and so on. So it's like somebody saying, so I've invented blockchain and then I invented crypto assets and then I said I need DeFi because I need to trade the crypto assets. So it could sound a bit like a circular reasoning. So my question is, can we see DeFi serving a purpose outside of digital assets world?
Yeah, absolutely. I mean, I definitely think DeFi is not all about crypto. I mean, there's definitely the development of cryptos generated these use cases where you can start making interest and so forth. But if you just look at, the whole topic around financial inclusion and people getting access to capital that they can't do through the normal banking system because the banking system is very costly and expensive as we heard earlier, to onboard new clients and so forth. So things like, crowdsourcing, lending pools. Okay, you need digital money represented somehow. It could be a CBDC, it could be a stable coin, could be crypto, right? So, I don't think the two are linked, right? I mean, crypto is one enabler of DeFi. DeFi is much, much broader. I mean, and I agree with your point. I think distributed and decentralized, that's a fine line there. But no, you just take as I said, lending, right? Providing, people pooling money that can then be provided as a loan to some other person or some company, right? That is distributed finance, right? But that's not crypto.
Okay, can I just change that? Because you talked about lending as a way to get some interests, but with lending, there's a risk. I mean, banks do take some risks. How does it, because I've been really scratching my head. I mean, honestly, I'm an engineer by trade, so I really wanted to understand what is so bright. What can we do with those public blockchains with smart contracts? And I still haven't found it. I found only one example that works, but it's the only one. But for lending, if I want to lend something, if I lend you some money, okay, I want to be sure to be paid back. So I'm going to ask you to escrow more than what I lend you. If you need $1,000 and I ask you to escrow $1,200, what's the point? You already have $1,000. Why would you pay me $200 to have that amount? Where does it fit? What is the sense behind that? I still don't get it. If someone can explain that to me.
That wasn't really what I was talking about, but no, I mean, I was talking about, just normal people, lending or providing funding that could then be pooled together for the benefit of others. Now, I don't know, if I lend $1, I'd be quite happy just to get $1 back if that $1 was doing some good, right? I'm not doing it necessarily to make a profit.
Crowdfunding.
Yeah, that's an example, example of a DCF.
Sure, but crowdfunding is one thing. Lending money to get some interest is another one. Of course, if it's a donation, fine. Yeah, I can give you €1.
But not only. I mean, because you mentioned crowdfunding, but we also had P2P lending for a long time.
No, but P2P lending, if you want to see your money back, it has to be escrowed somewhere. Also, you have the risk, or you bear the risk that you will never see your money again. Do you want to lend some money to someone and you're not even sure you're going to get it back? If it's a small value, like $1 or €1, okay. I call that donation or crowdfunding. If it's lost, it's lost. But you're not going to lend thousands of dollars or euros without having at least some strings attached. That's my point.
I guess one promise that DeFi lending platforms make to their customers is, on one hand, that is this disintermediation, so there's no middleman cost. So
there's a platform, you said.
So they're saying, well, there is a commission. There is a commission. Now
so there's a middleman. It's a smart contract.
If I look into the deposit interest that the banks in Romania has provided to their customers over the last few years versus the lending interest, Well, there's not just a commission there.
Because
there's
of speculation. Because of the speculation. That's the speculation that drove it.
Well, you know, some people could call it speculation. Other people say it's the cost of risk taking. Somebody, you know, cost of compliance, and so on. So there's probably a little bit of all of them, right? Because a bank is taking risk by lending, has to spend money on compliance, and also has to make profit, right? So there you go. And then people who deposit money with banks, they do it, you know, maybe not in the first instance for interest, but rather for safety, okay? Then again, high inflation, hyperinflation, and so on, that safety becomes a bit expensive, right? Because, you know, we say fiat is stable, is trustworthy, and so on, but then if it depreciates 10% a year, then in 10 years, you go to zero anyway. Speaking of cryptos not having value, that's, you know, that's true.
Bitcoin dropped 60% in 6 months.
Absolutely. So. Amazon did similar. Netflix dropped 90%, I think. So there is plenty of risk in the financial markets, and probably more, not probably, there's more risk and volatility in the crypto markets. That's for sure. It's a young market. It's happening. So we have it there. But coming back a bit to lending. So one argument is, I've read about DeFi saying, we remove the middleman. So yes, there is a fee for the platform, okay? The question is, how big is that margin, obviously, yeah. And then there is another argument, but I'm not familiar enough to say, and I'm asking you if that makes sense or not, is the idea that the programmable and smart contracts-driven nature of platforms gives you some sort of security, yeah? So you don't have to sell your receivables to a debt collector because you enforce it directly.
There is a certain degree of automatic enforcement that comes with a blockchain, but there is also, and that's actually, I think, a good reflection in the lending rate and in the borrowing rate. On the other side, there is a risk of pure computational risk or a pure, you know, programming risk, and you always have to consider that the risk rate or the borrowing rate, the lending rate, is just a reflection of the risk of the platform or the risk of the system in any case, in traditional finance or in decentralized finance.
Alfred, I think you want to add?
Well, first about the volatility. If you look at the Sharpe ratio, Bitcoin was the best investment in the last 10 years. Of course, you have a lot of volatility, but you also have a lot of return. And people basically, one basic thing in finance is, as long as people do it and don't go bust, it must have been some rational. And there's, of course, a big difference between a classical middleman and a smart contract. The smart contract does what is programmed. Yeah. Of course, if there are bugs, then still things happen. So you have this new kind of smart contract risk. And you also see this in the prices, yeah, of the platforms. And increasingly, the industry has companies auditing that. But we also know from classical finance, no auditing is perfect. And you have this new kind of risk. Yeah?
What I love is that before, when you wanted to invest, you had to be a lawyer. So you had to know the words of a lawyer. Now in DeFi, you have to be a programmer, because you need to read a program and understand if it's good or bad. So it's just a change of ability that is required.
I think it's still a matter of trust, because usually nobody was knowing the law enough. I mean, I would not trust myself to assess a contract, so I would go to a lawyer just as much as now you just put the trust in a different type of
exactly.
profession.
So lots of people will come to you because you are a programmer. But basically, to me, it's recreating the same thing, just with other people and with more risks.
Well, the risk, one thing which is very important about the risk is the fact that unlike centralized finance, where you don't know what bugs are and you don't know those bugs, what kind of amounts they protect, in here everything it's public. So the moment you've seen this wormhole exploit that drawn up $300 million, then it means that's the level. That's the level. The 300 million was the level where the exploit became attractive, and a lot of people looked at it.
Just like subprimes. I mean, all the contracts are out in the field, whether they are smart contracts or regular smart contracts. I agree with you. You have to be an expert to predict it. But at least in the centralized world, if something goes sour, there's someone that can put a hold on it and try to put some order to some extent, which is not the case in the DeFi because there's no regulation.
Just a bit of acid note from my end here to the regulators in general. It's good, I think, that the regulators are looking to take care of consumers, right? And in the financial instruments world, in Europe, we have the MiFID, Market in Financial Instruments Directive, and so on. Just a brief irony, I haven't heard too much about the desire to protect people who go gambling in casinos, right?
There are. I mean, you can be banned. That's the example I always take. You can be banned from going to the casino. You can be banned. Lots of people are banned for casino. The day you see someone get banned from using Bitcoin, then you call me. Of course.
No. I'm talking about the fact that people can go and spend all their money in casinos.
Yeah, of course. And
there is
then
no
you are
verification of scoring or degree of sophistication. It's not an argument to say that financial markets should not be regulated or that we should not have regulation to protect consumers. I think we have to be responsible about that. I'm just saying it's interesting there are different ways, versus different risks that consumers take. Yeah, different ways they're regulated. Maybe I think we touched a bit indirectly by starting from the definition. We touched a bit on risks and opportunities around DeFi. Any other examples of risk areas that DeFi is bringing, whether for investors, for the financial system, for whomever, and opportunities?
Well, there's definitely risk, right? I think anything that's new and is unregulated, poses some risk. And I think what we'll see is like all these. We heard of other examples, the advent of the internet and so forth. We'll see DeFi becoming a little bit more mainstream. And already the banks starting to get into DeFi. Now, I'm not sure their definition of DeFi is the same as everyone in the crypto world, right? But the banks are doing it, which says they're scared of it, right? And they feel that they actually can still make money, whether it's really truly distributed or decentralized or just partially, like a hybrid system, right? But the regulators will be the next people to follow, right? So you get the great creative idea, tons of investment and money being thrown into VC money, private equity into DeFi applications. Next thing, the banks start getting worried and pile in, and then the regulators. So it will happen, right? And it's all under the banner of protecting the consumer, right? At the end of the day.
If I may add, once regulated financial institutions, in particular credit institutions, banks are joining in, I think it's not just protecting the consumer, but it's also protecting the legacy financial system.
Oh yeah, that's why they're doing it. They're scared, right?
Well, from two perspectives. You could say from a competition perspective, but you could also say from a systemic risk perspective. I mean, we may remember what happened in previous financial crisis with financial system exposure to asset-backed securities and derivatives and so on. So I think it is legitimate to have concern from the regulators about how do banks, for example, get involved in having on their balance sheet this kind of assets.
I think that this is exactly one the touch point between the two systems is the one which is seen from the traditional side as the riskier part, because at some point I think the four biggest stable coins were as big as the biggest market money fund in US, and then you would start think that if everybody start pulling their money out of stable coins, then something might happen with the liquidity in the traditional financial system, and that's why the touch points between them are seen as the most risky.
Yeah, but we're talking about market value, and market value is something that has to be taken care that is looked at with lots of care. If you look at Tesla is valuated more than all the other cars maker in the world. Does it make sense? If you ask me, I don't think so. So that's why we have to take care about market value that can be the subject to some speculation or heavy investment from VCs and things like that, which just increases the value. But the value in the market is one thing, and the value, the core value of the asset behind it is something else. So we, and just like you said, that's where the big risk happens, that if everybody draws back at the same time, then the whole thing collapses. And then everybody will call that a Ponzi scheme. And that's the risk.
Any other risks and opportunities?
No, I think your point in a way is right. What we would need is a gambler's protection in the DeFi space. And I still wonder why we still don't have it, because this is what the industry could organize herself. I mean, in the normal banking world, you're also not protected. You're only protected up to a certain level of your bank account. And those who invest more, if the bank goes sour, that's your problem. But you could basically organize something this on an industry level, where you make some kind of insurance for your token. And I think this would be a cool idea to discuss, to protect the small investors. And they are exactly those who cannot read a smart contract. And the real problem in DeFi also is they have this Lego system. Yeah, the cool thing in DeFi is also, normal banking system is something monolithic, right? In DeFi, you take a smart contract from here, take another one here, put one on top. And of course, if you really analyze...
And you pay 3 times, because you pay gas on the first one, on the second one, or the last time, and then it costs you a fortune. It's Lego, but it's super expensive.
Not on all blockchains. There are blockchains that are cheaper.
Okay. But still, right. there's some risk of that also. So if you look at the dependencies, that's what my colleagues are doing at our research institute, because you can trace this. And this is the nice thing in DeFi. Because really know if you know what the contract is doing, it is exactly doing that. And that's the key difference with a normal bank. In a normal bank, you have to trust the stuff there.
Yes.
And that's the point. But I think the key point is to make DeFi safer.
One particular risk that I see, but it's not very widespread, and well, maybe it's widespread within some blockchains like Ethereum, is this so-called MEV, whereby you want to make a trade or a swap or something, and then there are some bots that go into and go in front of your transaction, and then eventually they profit more than they knew profit from the transaction. And that's something that it's purely DeFi. You won't see this in traditional finance, or at least you don't feel it that it is there, but because I'm sure that it is.
Front running was invented by securities markets traders, yeah? So it's not something new.
At least in here, it's a public and transparent front running.
It's not a virus, because what you say, it's a virus.
Even front running, designing bots for front running, it's something that we've seen first in the capital markets, by the way. So.
No, sure. But here it's something that is declared, it's something that is known, that is regulated. So it's something that is part of the system. It's not something that's been hacked by some people for their own benefit. That's a huge difference.
And one other kind of opportunity, which I think it's very particular to the DeFi space, is this flash loans, which it's impossible to imagine working in a traditional finance. So you start up with basically virtually no money, and then you can end up doing a trade in which you can profit.
Yeah, I mean, to me, if DeFi manages to find really a sustainable new way of lending, that would really be magic, yeah? Because I think the essence of capitalism, of the world as we know it, is the ability to borrow money. Yeah, it's ability to make a bet on the future, right? Without that, you wouldn't have startups, you wouldn't have, anything, and you'd have a much lesser diversity of companies and enterprises. So we discovered a long time ago lending in various forms, could be now private equity and so on. Anyway, money advanced before the business exists, before there is cash flow. So you have specialist risk takers, banks are amongst them, VCs are other type of specialist risk taker. Now, each of them has their own specific, yeah, VCs take a higher risk, but they take an equity, banks try to take a lesser risk, but it's pure debt. It would be really amazing if DeFi would invent a new type of lending, yeah, based on other principles other than the ability to assess risk.
You have to consider that lending, for instance, you lend money, so this is a transaction that happens in the financial system, and with the money you do something that is outside of the financial system. Yeah? There is nothing preventing you to doing the same on a blockchain. Yes, but what's even more interesting in blockchain is that at some point, I'm absolutely sure, it's just a matter of time, the business will be on a blockchain and you will be able to lend money based on your whatever activity or your number of votes that says this or that, or you will have a deed on a land or a building that it's on the blockchain and you will be able to put it as a collateral for a loan. So as long as things happen in the same kind of medium, they will start flowing easier.
Which, many people say that cryptocurrencies are much suitable currencies for metaverse, for example, than the fiat currency.
Just one thing regarding what you said, I would just make a difference between lending and investing. In both cases, you're giving money, but it's not the same goal. It's not really the same, because on one...
Correct, fair enough. I refer to lending generically as to giving money in advance to a business that does not have yet today enough cash flow to repay.
No, sure.
Yeah.
Yeah. But like you said,
in equity form or real loan. I mean, we spoke about what is DeFi, risk and opportunities, the need for protection. Some people say the need for regulation, actually. What do you think would be the right approach of a regulator in regulating DeFi? And I know DeFi is many things to many people, so maybe it's not easy to answer the question. But what you hear, if you look a bit into the phenomenon, you hear about AML issues, you hear about maybe KYC, you hear about some services that maybe should be regulated, like financial advisory. Yeah, you hear about derivatives, which could, by the way, move from the digital asset environment into financial assets environment, right? Because if you see a digital asset as a commodity, then a derivative on a digital asset is a financial instrument. And then you may have securities law, because we can have tokens which are actually securities, right? And then you have legislation around exchanges of securities. I mean, there's plenty of things to, and then consumer legislation, GDPR, you name, you say what. So, how should the regulator look at this? Yeah. Where should they start from?
Well, the first thing would be really to understand how it works and see the limitation. We talked about the limitation and the risk of smart contracts, but there's one thing that we haven't touched upon yet. It's also oracles. Oracles are super important. Of course, imagine you're betting on a soccer game. The code says if A won, this happens. If B won, this happens. But I mean, the smart contract is not going to watch TV. Someone has to tell A won or B won. What if that someone lies? I mean, you check the code. Everything is fine, but you're not getting your gain because somebody said something wrong. And let's not forget one thing. In a blockchain, you can say wrong things. It's just going to be written forever. But you can't have wrong information in the blockchain. Blockchain is just a notary system. So the first thing, one of the things that are important are making sure that whatever a smart contract refers to outside of the blockchain has to be strongly controlled for the benefit of the people who are calling the smart contract. Because if the oracle says something wrong, then the whole program will output something wrong by default.
Thank you. Other angles, other advices or ideas for the regulators?
Well, it's not rocket science, right? I mean, maybe it is rocket science, but you listed like dozens of different areas, right? So there's not one simple answer, right? The people that regulate securities are different than that regulate lending, and so on and so on. So I think you have to, what's going to happen, I think, is where people see the most risk. So if there's visibility to some particular scheme where people get ripped off or they make big losses or something, that's what's the regulators tend to just focus in on the biggest problem that they see in front of them. And then they'll go and address that. And then they'll move to the next one, right? And unfortunately, this is the history of regulation, right? It's like there's no strategy for regulation. It's just they deal with individual issues as they pop up. Maybe what they should do is actually, going back to the education point we talked about earlier, maybe regulators should be, really, really understand the technology and what's possible and how people are using it, and try and come up with a more holistic sort of policy around DeFi. Because without that, what's going to happen is it's going to be all these piece parts. It's like, there's something sticking out on a balloon, you push it in and it pops out somewhere else, right? That's the way it happens, right? The world is full of super creative people that find ways around things, right? So, long answer, I think, it'll start off with some piece part, trying to fix a particular, something that's in the press that's a big issue, and then hopefully they'll figure out there's more of a pattern here and get a holistic approach. Because I think regulation, it doesn't have to be heavy-handed. The more people understand the technology, the lighter touch you can have as a regulator. But they get heavy-handed when they don't understand what's happening and they just put the shutters down.
Yeah, I think that's a very important piece, that there is no inherent link between blockchain and the location. So if I don't like the regulation here in Romania, I can move to Singapore, or I can move to Salvador, or to wherever I think that the regulation is suitable for me. And from this point of view, people will much easier opt out, if you will, of a specific jurisdiction instead of being compliant with whatever the regulator tells them to do. So from this point of view, I think that the regulation should be minimal and geared towards protecting people who have absolutely no idea what happens there.
Well, actually, there is a guideline that was prepared by World Economic Forum about policy guideline for governments how to regulate DeFi, which I find quite impressive that a forum like WEF has thought about that. I mean, that's another heads up that that's not something, DeFi is not something to be neglected, right?
They did a toolkit for CBDCs as well, so they do all these research efforts, which is unusual.
Exactly, it's very interesting they're doing it. And they actually list different regulatory approaches in an interesting ways, like, you can have regulators that are trying to apply old laws to these new things, to the extent they are applicable. So that's one approach. Like, for example, consumer legislation, nothing stops you to apply it to a new instrument. It doesn't have to be in the law that it's a digital asset, as long as it's about the relationship between professionals and consumers, consumer law applies, You could also apply AML and to some extent, certain things. So there's one approach. Another approach is the opposite, is to design completely new, tailored legislation for that. And then you have hybrids because, for example, if you look in Europe at MiCA, which is a European regulation to regulate actually digital assets, it's a hybrid between banking legislation and capital markets legislation. So there are clear references there to MiFID, Market in Financial Instruments Directive. So there's a certain assimilation with how securities are treated. Then, of course, for those tokens which are securities, then anyway you go directly to MiFID and so on, and financial intermediaries. But there's also a hint that stable coins will probably just be issued from a certain threshold upward by banks or by e-money institutions, which, if you think about a stable coin and e-money as is regulated under European law, it kind of makes sense to say stable coins should be issued by e-money institutions or by credit institutions. So that's new legislation, but it's a new legislation which is actually trying to frame new instruments and new context to old, already pre-existing legislation. So there are, various ways to do it. Also, I think WEF mentions the option to give opt-in choices to participants to say, it's nothing illegal in what you do, but if you choose to get a license or be registered as we do, then you'll get some extra benefits. I don't know, banks will accept you as a business partner or whatever, So various ways to deal with the same thing. Last thing on my mind, also being aware of the timing, what do you think would be best for a country to do confronted with all this novelty. Yeah? So there's a lot of, and we're not in US, which this, you know, the digital is already a very political thing from what I'm reading. Yeah. But in Europe, you have, you know, different views. You have, amongst others, Germany, who designed years ago a blockchain strategy, country strategy. Very interesting. Yeah. Some jurisdictions were mentioned here by Felix, but I would also add Switzerland. You know, you know, if you say banking, you think about Switzerland, right? Well, they are quite advanced in welcoming blockchain and digital assets and, you know, giving them licenses, bringing them into the realm of regulation and so on. So I would say they understand pretty well what money is and what banking is, right? We should give them some credit. So looking at all these things, but also at the, you know, the scams, the scandals and everything around this. What should the state do, you know? Should it wait for some global regulation and then implement it? Should it try to front run? What's your views?
My view is the country should lean in, so it should be thinking about all the benefits of DeFi. You know, you have to factor in the potential risks as well, right? But the upside potential of DeFi is really more people getting access to more money. Right? That's a good thing, right? That's helping with financial inclusion, it's helping with lots of different use cases. So that would be my starting point, if you like. You know, it has to be done in the context that you know, there will be some failures and there will be therefore some need for regulation, right? I wouldn't look at it, as a country, I wouldn't look at it in isolation. You know, I'd look at what's going on around the world and learn from what's going on around the world and be, you know, somewhat on the front foot. That would be I'm always optimistic, right? That would be my thinking.
I will weigh in here with a very specific, I don't know exactly what a country should do, but I know what it shouldn't do. It shouldn't issue a half of legislation, and I'm sure that you know what I'm talking about, and then said that this organization will give you the norms in 6 months, and 2.5 years later the regulation is still not here. So that shouldn't be done in any case.
Thank you. Other ideas?
Well, Austria is part of the Euro system, so basically Austria as a nation is constrained with the rest. But the Austrian National Bank has founded a startup, OnePay, and the
Austrian National
Bank has a startup, yeah, and they are actively pursuing, looking at all these things, and also doing prototypes with others, and participating in the discussions on the Euro level. I personally would rather do another PhD than be a regulator, because it's terribly hard, right? They are already pressed with their current resources. And if you want to make a good regulation, you really have to understand the technology. Otherwise, some stupid thing comes out like the EU discussion about the unhosted wallets, where they wanted to identify each transaction, creating huge honeypots without something useful. What I tell regulators is, use these new technologies for better regulation. Because the key point is you have this distributed ledger. Of course it's pseudonymous, but you also have new kinds of encryption where you can do clever solutions to find out if something really happens, then you can see it. Of course, not the normal transactions. But then, of course, you need to be a very clever person, right? And I think the point is really collaboration, also between the legislators and so on. Also because you have this regulatory competition globally. So the most clever of you become regulators.
I was actually expressly hinting to this regulatory competition because we see it. I mean, if you look, you see various countries trying to entice or discourage digital assets.
You know, I totally agree with these last remarks, and I happen to be fortunate to be part of the market advisory group of the digital euro, so I can tell for sure that this is very complicated, and they are doing a great job understanding everything. And even though here we're discussing about this, they have to regulate that because they need to get everything in their they need to have the whole picture to really do it. So it's very difficult. whatever regulation they come up with, they'll probably have some holes in it because I don't see anybody not making flows, and they'll be pointed out. But I really have to say that they are working really hard. There are really bright people, and I really trust them for doing the best for us as citizens. And it's no easy business. I wouldn't take their place. I'd rather do another PhD.
With one remark, though,
You're welcome.
With one comment there, because you're now referring to the people working on digital euro, which is CBDC, right? And I'd say even that could be a discussion itself. Does DeFi, how will DeFi play with CBDC?
It's even broader. So that's why
So
it's even broader, because nobody could come with nobody has, I think, a definite answer of what DeFi is or is not, because there's no book. No one invented DeFi and said this is the definition.
It's probably invented every day.
No, exactly. No, that's why. So there's no good or bad definition. So it's something that is polymorphous, that is changing all the time. So it's very difficult to grasp, very difficult to understand, and therefore very difficult to regulate.
Last line from each of you. It's the same sentence, the same question. Where do you see DeFi? What do you think DeFi will mean for the society 10 years from now?
Regulated, probably private environment rather than public environment, because I still don't get the interest of it. And it's going to be completing regular, so it will become as an additional part to what is existing today. And I think that the existing financial world today will definitely leverage the technology. So the technology will enable new things. Incumbents will still be there providing their services and maybe some more, and new entrants will be appearing with new services, and we as users will have more services, regulated services.
I think that is already happening today.
Yeah.
I think that specific areas of DeFi will be much bigger than similar area of CeFi.
Okay. That's an aggressive prognosis.
I'm always very optimistic.
What do you think?
Well, I told you I'm an optimist, right? So I think we're going to see more interesting and creative new sort of financial products in the market through DeFi. I think it'll become mainstream. It'll become a method, to add to the legacy approaches. And I think it will be certainly to some extent regulated. But the history of regulation is when something new comes along, people don't know how to regulate it, like the car or other technologies. So the regulation will always lag behind, but it will be there.
Thank you, Alfred. Closing the talk. Add the percentage. How much of the total financial system you think DeFi will be?
I'd rather do another PhD. I don't see that everything will be regulated, because in regulation you always have the implicit assumption that the government is good to you, because basically it's law, right? And think about now how many percentage of the world population lives in non-democratic nations. So I think we will have two worlds. In the good world, yeah, where we have trust in governments and governments work, clearly it's the nice thing about smart contracts and these kind of things, they're of course more efficient. And every bank will thrive on efficiency, and once you have this problem solved out with the regulations, of course they would provide their services cheaper and better and faster, right? But you always will have this other area where people simply want to have finance besides the state. And I close with a word from the Austrian economics: money is what people think that money is.
So, Andrei, I have a question for you. What percentage do you think it will be in 10 years?
I think 10 years from now, the question will not make sense. I think the traditional banking system and DeFi will be so much the same thing together that nobody will quantify percentage-wise which is which.
So why did you ask the question?
I think that, crypto, long before crypto will bank the unbanked, it's managing to unbank the banked for now.
So we're at the end of today's session. Just a quick reminder to everybody, 6 p.m. today, online, we have the No Cash Gala announcement of the awards. So make sure to join there, and definitely see you tomorrow morning with, I would say, an equally interesting group of folks to discuss about the same topics, but maybe with different angles. Thank you, everybody.